Okay, we're watching for the market to run up right to the center of the opening range, 2.25 up here. And let's see if we can. Let's go ahead and hit them right here on the shorts. I shorted the market 44.02 quarter, 44.02 half, 42.02 quarter. Let's bring this down to 94 for right now until I can figure out what to do. So we're short at 44.02 quarter. They jammed them right up to the center of the opening range, and we're watching now to see if 44.02 quarter in general can hold back, and let's see if they start hitting them with a little more selling right up in this area. And if so, there's a possibility that they could knock them right back down. With a little bit of patience here, let's see if they can knock them back down, with the target goal being the 94 area. Now, the only reason I'm working the short side is because on the bigger picture, we're in a selling pattern, but that's not a concern. I just working off for the NAS trading here, the futures, I'm just working off very short-term patterns, and this one suggests that this upper level area here should end up getting hit with some selling after this second level move up here. Again, it's tied in with the first hour traditional bullish on a Monday. Even if it's in a bearish pattern traditionally, you can see they sold them off really strong early, but there's still that underlying bullishness kind of persists on Mondays, at least for the first hour, sometimes into the second hour. Yeah, that's what they're trying to do. They're pushing it a little bit more than I thought here. Let's hold short and see if they can knock them back under 44.02 to start. Let's get them back under 02. And like I said, if they do fizzle out from here, we'll be watching for a move at least back to the bottom of the opening range again. We got to see them fail under 2/4 and then return back to the bottom of the opening range at 96.50. If they do that, it might be a confidence buster, and there's a chance they could knock them down to 94. So let's just take it tick by tick here. See if we can break them down under 92 even to start. Let's see if we can knock them down under 2 even. And then watch to see if we can dip them down under that and get some more selling pressure coming back in. And again, we're short at 44.02 quarter to 75. Some of you might have gotten a tick or so higher. I'm just using a quarter, which was one of the lower ticks I called out when we got in. Watching if they can get them going back here under 4402 to give us some kind of sign that they're going to maybe kick the weakness back in. So 4402 is going to be an important number for seeing weakness kick back in here. I think the pattern's starting to gel here and formulate to give us a lower move. Let's just see if that selling energy can kick back in here and they can start blasting them back under 4402 to start, and then there's kind of an air pocket under 4402 down to 98 to 99 zones. So let's see if they hit an air pocket there and they just kind of blast them lower down to 4400 handle again, which would be a good sign for our trade. But again, the ultimate target here, this is actually more like a small swing trade. And the reason I'm calling it that is because what I'm basing it on is this is like the same old sell-off in the morning, and then the riggers try to rebound the market. And the idea that this rebound here, which appears at first measure to be only about half of the drop, if it fails here under 4402, there's a good chance with this current, what I think is a slow topping process, this could fail here at a 50% rebound, which I haven't measured yet on the fibs. Let me do that, in fact, real quick, if I can, without taking too much away here from, let's get these fibs on here and measure the pullback here down to the bottom. This way it'll give us an exact road map. I know there's a lot of lines there, don't mind. Okay, the 50% rebound. We measured the opening range. We saw they came right to the center of the opening range, dipped slightly above it. The Fibonacci retrace is here at 4400 quarter. See this azul colored blue line here. This is the first fib retrace. This is the normal fib retrace, the 61.8%. So they did blast them up through the center. The actual center of that whole move was 96.50, and they're beyond the retrace here. So 4400 now is going to be a really super key number. That's a return back to the fib number, and we're getting right back there now. So if we hold under 4400, and it's what I'm suggesting is that we're going to go into trade back into a kind of sell mode with this current topping process that we're in. If they start seeing that these tops start getting hit rather than create these radical, literally ridiculous rebounds off the lows, which you saw another one of those get pulled on Friday, they're just not letting them sell off here. But if we can now take them back under 4400 and they start showing that weakness back under 4400 and they let them go, the 50% retrace is right here at 96.50, kind of a key number. I'm going to assume they're going to go to 96.50 and get blasted a little bit harder because of this new, what I am perceiving as a new topping sell kind of mode coming in. If they break 96.50, that will at least get 94.50, and it could be substantially more. I mean, they could take them all the way back down here, but for now I'm just trying to calculate numbers that seem very solid that we can hit right now here in the moment with the current setup on the high 5 and everything like that. We got a weak advanced decline line, a bearish trend. You can see the Dow is just barely up, but look at the transportation index getting hit with selling here, down 1.22, very bearish. Normally on a divergence like this, you're going to see the market follow the transportation index. So I think 94 is a good calculation. We got to watch this 96.50 level here. Let's see if we can knock them down to the orange line in the sand right here, which is, when it's orange, it's bullish with price above it, and then trading under the line in the sand, which is currently 95.75. Can't, there it is. You can see it right there. Breaking that, we should be able to get that 94 action. So I'm really now, I think they might even break lower than 94, but I'm going to just go ahead and target that 94 for now. I think it's just a good semi-conservative kind of estimate for a mild swing trade, which is what I'm expecting here. A mild swing trade. So let's see if we can dip them under 96.50 and knock them down to 94. And if they keep going, then it wouldn't be unexpected, but we just, in that way, we caught a what I consider to be sort of a conservative swing trade off that failure high up there. And it hasn't completely failed yet. Maybe they're going to try to bounce them back up there. You know, the riggers have a lot of money that they can use to manipulate the market however they want. So let's see if we can get this thing going. We're short at 44.0275. We're looking for 96.50 to come into play, and then we're looking for that to break and get that 94 action. I think 94 is a very good conservative swing trade here if we can get the market to pull back for us here. So let's see. We're just kind of, you know, riding on the analysis I got here to see if we can get that result that I expect. I think it's going to happen, but I think honestly once they break 96, maybe 94, they could sail down to 86, but I just we're in a bullish pattern right now. So like I said, I'm watching to see if that can change and we can get the downside result rather than a revamp to the upside again, which it's tricky because I wouldn't put it past the riggers for them to try to shore up the market again to keep this rather stubborn topping process going here. You can see them doing it now. They're just not letting them go. There's still this little game here. See the spike candle? Still this little game here of letting this topping process drag on. So let's see if we can get them going back under 4,400, break them down under 98, then 96.50. Target 94. And on a bigger picture scale, it's tempting to put it here at the fib number at 92.75. We'll just leave 94 in. We'll just leave 94 in. See, this bottom of this candle is where they ramped this last level up. If it's going to turn bearish, they're going to go back down to the bottom of this candle. Well, let's do this. Let's move it down here to 91.50 to the bottom of this candle. We'll watch, 98, 96.50, 94, and then 91.50. Well, the fib number at 92.75. We'll try to go for a larger scale swing trade here. I have confidence they're going to hit them again on the downside, especially now I'm seeing this transportation index leading them lower. That could end up influencing the market to get hit with stronger selling. That's what just changed my mind here a little. So let's see if we can get 98 busted out, get this this is the center of the ramp up, 96.50, busting under the 50% retrace. Maybe they dip them down towards 94 again, and we just start watching to see if they can peel off lower and if we're going to get, like I said, more of a downside reaction here. Okay, we're starting to get some little bit of selling out algorithm kicking in. 5-minute chart is topping out and starting to turn back lower. So really it's kind of just a matter of seeing if the riggers are going to let them go, and we're going to break them down to this, to start out here, this center of the 50% retrace of that low dip, which is at 96.50. Breaking 96.50 could possibly cause a watershed move to the downside, either support or a watershed move. If we get a watershed move, here it comes, let's see, we get a watershed move under 96, kind of a return to the selling, then we watch for 94, and I'm going to try to target this. Here's the thing, breaking 96, there we go, breaking them down. 93 is that Fibonacci number to 91.50. 93, a fast move under 93. We're going to go ahead and cover the short. Let's see if we can get them down here, breaking them down here under 93.50. Stay ready to cover up any time here. A little bit lower, a little bit lower. Watching 91.50. Let's see if we can break 93 down a little bit lower. We're getting a big spike move here, which is what I usually call a gift. Let's see if we can break them down a little bit lower under 93, and then we're going to cover them up here. They actually did what I wanted to cover them up, and I'm holding because I have some idea that they're going to go lower. Let's stay ready to cover them up anytime. Breaking that 93.50. If we get a fast continued spike lower, just stay ready to cover up anytime. Still targeting 91.50, but let's see if we can try to cover them up on a dip down towards 250 or lower. Let's see if we get another spike lower, and let's watch 250 or lower. I'm not going to worry about an extra point. Let's see if we can get them to break down a little bit lower and knock them down under 250 or lower to cover up this short here. A little bit lower. Let's see if they can just punch them down a little bit lower for us here. Should be in the cards. The selling pressure should be on right here. Let's see if we can knock them down. They're stalling here. Look at how they're stalling. Okay, there we go. Cover them up right here at the mark. Cover them up at the market. 2 even, 92 even, 92 quarter. 92 even, 92 quarter right there. You should be covered up at 92 quarter. 92 quarter. So that was exact 10-point gain on that trade there. This is what why I use that football analogy I gave you. We gained 5 in the first trade, so we got stopped out in the second one for 4 points. You don't just throw a brick at, you're watching the game and your team's, the other team intercepts the ball and runs a touchdown. You don't throw a brick at your TV and stomp out of the room and say, I'm never watching football again. It's part of the game. Look at that nice, we intercepted the ball this time, knocked it out of the park, and ran for the touchdown. Now, obviously, look at 91.50. They're blasting them even lower. That's okay. It's that selling mode coming in. Let's see how our option's doing here. The put option, it's just slowly inching higher. We got different factors coming in. We need the market to really get hit with some selling for that to kick in. But I am looking for, and we got to get it. I would say in the next 3 to 5 days. We can't go much beyond it because then you start getting that time decay. The option is good up until April 16th, but we kind of need, next, like I said, 2, 3, 4 sessions, we need to see if this market can break down under 2012 to 2014, crack that down to the 2000 handle, and then possibly dip down to 1995 to 1990 area. That's what we'll be looking for to score a nice gain on this option. So the option is one of those things where you can just kind of leave it alone, let the chart pattern work, and like I said, that average price at the April 16 205 puts, average price at 260, currently trading, the bid is 353. So we got a nice cushion on it, but like I said, options have time decay. They got so many factors in there, so we're having to, we can kind of leave it alone and just watch the market. I mean, you get a Dow selling off $100, $150 day, that's going to really kick that option in. But I'm giving you very specific targets on ES, which is what we'll do on each of these trades going forward. So with that in mind, let's get back to the futures here, and I'll give you a wrap up here. So we had our first trade was up 5 points. We lost on the trade number 2. We got stopped out, or I got us out for 4 points under our 5-point stop. I told you in the intro in the beginning, I usually try to get us out before the 5-point stop is hit, but it needs that breathing room. You can see that in this second trade, 44.02 quarter. Let's see here. 44.02 quarter. You see, we had it. They pushed him up to 450 after we got short. But I was targeting 94 way up here, and look what happened. Look at that, man. They came all the way down to 87.5. That's amazing. That's good. That's a bearish sign that they're getting a little more kick rather than a bunch of riggers coming in at 96.50 and blasting them back up. So now 10 points on that trade. So that puts us up 11 points. Now, for those of you new to the room, and I mentioned this on the introduction, which I read every day, same thing. Our target goal is 8 to 15 NASDAQ points. And I say 8 to 15 because if we just grind our way slowly with 4 or 5 trades at 8, I'm going to close the room. But if we have, like today, we had a 5-point gain, a 4-point loss, we're up 1 point, then all of a sudden we got a 10-point blaster on that swing trade, puts us up 11 points. Now 11 points, what I'll do now, I stop and do the math here. 11 points times $20 a point on NASDAQ, right? That's $220 per contract. The meter's not correct. Don't worry about that meter. That's not important. $220 per contract. And we have 3 trades. And you shouldn't be paying much more than $4 per contract per contract on a round turn for the E-mini. So that's $4 a trade. So 3 trades times 4 is minus 12. You follow me so far? So that's plus $208 if you're trading one lot after commission. That's what you should have. And then I always run the calculation based on what I call a blue-collar working trader's account, which is 4 contracts in a small $5,000 to $7,000 account, which is what a lot of our regular guests and members and, small kind of trade. We got some that are trading, I don't want to mention it, but a lot, like 20, 30 lots. But for right now, I'm just letting you know that a blue-collar working trader account, 4 contracts times 4, our goal each day is $500 to $1,000 on a blue-collar working trader's account. That way you can, if you're not there yet, if you can start out there after you've been in the room a couple days and seen the action, that's great. Otherwise, build up to it. But that would equal $832 after commission. We're done trading. I don't push it any further. I know it's early. Normally, we try to get out before the European market exits the U.S. market, which is at 11:30. I try my best. Sometimes, we have an early drawdown phase, and we got to sit here and work all day to get it back. It's rare, but that does happen. It can happen and does sometimes. But we are done trading for the day here with 11 points, hitting our target goal of 8 to 15. $832 after commission for a blue-collar working trader. The market continues to sink as we watch for 12 to 14 to come into play, which was Friday's low. They break that, and the selling piles on, right? And ideally, the selling that we get down there, and then the selling piles on without any more rigor or interference like Friday. And they finally say, okay, then we're going to let this market sell off. And if we get a blast down under 2,000, we go on high alert, watching 1195, and then possibly with more pile on a dip as much as 1178. Beyond that, if it's what some of these guys say that, oh, it's gonna another 10% drop and all that, we don't listen to that. We just follow very strict, kind of like our scalping here in the room. Some of you might be shocked that we're done trading. It's like, nope, that's it. We hit our target, we're done. We're not going to just pound our brains out in the market all day, because the more you trade, the more risk exposure you have. So, with that in mind, we can go ahead and end the session today. Because we have a lot of new members here, I'm going to go ahead. Let me do a couple cosmetic things here, and thanks for joining with us today.